The next amendment relates to offshore funds and fund managers in India. It may just happen that there might be certain offshore funds, okay, who may have an Indian fund manager, right, who is going to manage the India investments. Here the India fund manager has been kept as ICO. And the same fund manager may also be managing some of the overseas investment of the offshore fund. Now, in India, basically, there has been debate around whether the ICO or the India fund manager who's there can be treated as a business connection or a PE of the non-resident fund in India, resulting in the taxation of the income of the fund in India. So what were the issues which were there? The issue was whether there's a business connection which is the equivalent of a permanent establishment under the Indian local laws in India for the fund. Okay, why? Because it may become resident due to the control and management in India. The genesis to this lies in the fact that if a company has a control and management in India, it is treated as a resident in India, triggering the taxation of a global income. Okay, so can the fund which is there outside India be treated as having a PE in India because of the existence of the manager? Not only for the fund, the issue was also there for the fund manager. Okay, so if this person is actually helping manage the fund's investment which are outside India, if he is in India, the income from fund management activities outside India while being in India is also taxed in India. So look at a situation where this gentleman was sitting here, then basically there was no exposure for the offshore fund to have a PE in India. If he was sitting here and managing these investments, again there was no exposure of having a PE in India. But just because this guy is sitting here managing all these investments, both the offshore funds has a PE in India, this income runs the risk of being taxed in India, and this gentleman in any case is taxable on all his income in India. To address this concern, the budget has provided for certain proposals which are as under. The structure remains the same, subject to conditions applicable to the fund manager and the fund. What are these conditions? This is something which is listed in the next slide. Then there will be a neutral tax liability even if investment made through a fund manager in India. So the tax liability of the fund will be neutral, assuming the fund manager is in India. So the law assumes that even if this guy is managing your investments and he is there in India, we'll assume that he does not exist for the tax purpose. So whatever would have been the implication if you would have invested directly, even if you invested through the fund manager, we are going to assume the same level of liability in terms of the taxation. Income of the fund outside India not taxable solely because of the location of the fund manager's activity in India. So if this fund has some investments outside India, the income from these investments will not be taxed in India merely because of the existence of this gentleman in India. And what are the conditions for the offshore funds? There are several of them. We'll quickly wrap them up. The fund should not be a person resident in India, meaning it is not a resident of India. It is a resident of a DTAA country. The participation of resident Indian in the fund does not exceed 5% of the fund corpus. You can't have a situation where all the Indian residents are being the beneficiary of the fund. The fund has a minimum of 25 members, so it should not be something like a family-owned thing or something. Any member, along with connected person, shall not have any participation interest, directly or indirectly, in the fund exceeding 10%. Aggregate participation interest, directly or indirectly, of 10 or less members along with their connected person in the fund shall be less than 50%. All these three, if you see, are meant to ensure that these are the genuine funds. Okay, these funds are not being set up by one company just to get some advantage. There has to be a wider participation. Then the investment in individual entity. So this comes to the investee entities, is less than 20% of the fund corpus. No investment in associated entity. Monthly average of the corpus of the fund should be greater than 100 crores. New fund corpus at the end of the first year shall not be less than 100 crore rupees. Right? So it is intended to give advantage to some larger funds and not smaller funds. Fund shall not carry or control and manage directly or indirectly any business in India or from India, except the work that is doing. No business connection in India other than eligible fund manager. So it should not be that you're running parallel businesses in India or you have parallel business connections in India. Arm's length remuneration paid to the fund, by the fund to the eligible fund manager. Now, what are the conditions applicable for the fund manager? We saw conditions applicable to the fund. He should not be an employee. Okay. He's registered as a fund manager or investment advisor according to the specified regulations in India. He's acting in the ordinary course of business as fund manager. And the person along with his connected person, which means the fund manager, is entitled to profit which is less than 20% of the profits of the fund from the transaction carried out by the fund through such fund manager. So his stake cannot be greater than 20% for what he's handling.